Okay, all right. Welcome everyone. Another Thursday. Another week has passed, and not of much things have happened over the week, because I think the most awaited data are coming into the next month. So for the whole Monday, Tuesday, Wednesday, and then today, the only and even tomorrow, the biggest data that we're gonna get is ECB. Okay, there's no much volatility happening around the markets this week, at least. But be prepared, because what we can have today, at least for me, it's going to be in the night, so it can shape the future of the euro. All right, it's just we are on a very, very decisive point of what we're going to do, what ECB will do with the euro, and that's very interesting. Okay, so we're going to drag a little bit deeper into that. We're going to dive a little bit deeper into the ECB and also the euro dollar, because I had four trade ideas yesterday: euro dollar long, GBP US dollar long, Aussie against US dollar long, and then US dollar against the Japanese yen short. All of those trades are into the right direction. The only thing that we didn't quite get was the entry. At least I'm saying about myself, but maybe some of you had a different sort of entry strategy and enter it at the market price, or even just sort of trading the bearish pullbacks to bullish pushes. So it just depends from one to another. I guess the most important part is knowing where that would be going, and we got that right. So we saw that the market was going up, and we got on the right side of the market, and that's the most important. So at least I'm going to run over my trades again before we go and start the actual webinar. But I had all of the 5 trades into profit if I had my entry hit, but that's okay. Cool. So 2 topics, very quick and very simple today: ECB interest rates decisions, and with that, what can possibly happen with euro dollar. Will euro dollar continue bullish? Will euro dollar sort of turn bearish? What will happen? Okay, so that's my 2 takes. I've did a blog today. Actually, I did an evergreen. Let me share that with everyone, because there's no sense if I'm writing and no one is looking at it. So if you come to the ACY website and then go into learn and then come into education, and then on education, you can select my name, just Luca Santos here, and you will see that I've did just today, the 24th of July, how to read central bank statements in a simple and complete guide for traders. So if you click here, you get access to all of my pretty much breaking down the whole topic about reading oops, that is a wrong image. I'm going to have to correct that. But it's literally break down bit by bit here, and you can have a look at that, and it's completely for free. So what I will do is I will share this with everyone on the chat, because that's one of the topics that we're going to discuss today: how to read central bank statement. Okay, the link is on the chat. You can have a look at that once we finish the webinar, of course. So that is really what we're going to be discussing today, talking about the central bank. Then we're going to be having a look into the euro dollar. So first and foremost, let me share the trades that we had yesterday. Let me go to 15 minutes. So this was one of the trades we got yesterday. We were waiting for the market to come back into the 38 of the Fibonacci, and it didn't end up coming. So, but as we can see from here, where the market was yesterday, we had like a small pullback and then a continuation upwards. Okay, so the direction was correct, and that was exactly what we wanted. But unfortunately, we couldn't be onto the trade. But we know that the fundamentals, and remember what I said yesterday, you only have two pillars of a strategy. You have the direction, if it's going to be up or down, and you have the entry criteria, and then you can use a bunch of different ways. And you can use support, resistance, supply and demand. That it's pretty much similar stuff. You can use moving averages. You can use Fibonacci. You can use Bollinger Bands. You know, there's so much that you can use for that part. But we missed the entry, but we got right on the direction. And the other trade we got was GBPUSD long as well. Exactly same. Okay, we can clearly see the direction was correct. What we were waiting, what we were hoping for is that a break above that, below this area, a push back about on the support, and then a continuation up to the highs of that L downtrend. Okay, but again, the direction was correct, but unfortunately we ended up missing the entry point. The next trade we got was the Aussie against the US dollar. But this one, the direction was correct, but even if the direction was right, we wouldn't be looking to trade, because remember what I said, what we want to see is a pushback first, okay? Because if we look and if we think about, we are on a very sort of consolidating market here, okay? Oh wow, I can't do a straight line for the Jesus. Why I can't do a straight line like that, but I can do a straight line like here. I don't know. But anyway, so as simple as it is, we were on a consolidation. Okay, so there was no much sense for us to be long on the top. And right here, somewhere around these levels, was the top of the consolidation. So what I was expecting is the market to push back and then break the trend up. Okay, ended up not happening. But again, the direction was correct. US dollar bearishness and the other pairs bullish. And the last one, oh, I've took it off, but the last one was the US dollar Japanese yen. The direction was correct again, but we ended up missing the opportunity on the entry price. Okay, so these were the trades yesterday. It was pretty good trades, as I say. You know, it's patience will drive us, and that's what we need to be here tomorrow, and then we need to be here next Monday, Tuesday, Wednesday, Thursday, Friday, every day. Okay, cool. So let's come back to euro dollar, because that's our main driver today. What do we think will possibly happen with the ECB is pretty simple, and I've mentioned that on today's video. Okay, there's only one thing that ECB can pretty much do today, and that is the pause. Okay, so most likely they're going to be looking to pause for a few reasons, and even majority of the economic calendars. Let's say we can get FinLogix in this one, so I can show you economic calendar. Let me just change for euro area only, and we can see today. There we go. So you can see the last three lines over here at 10:15 p.m. We're going to get euro area deposit facility rate, interest rates decision, and then 30 minutes after at 10:45 we get the ECB press conference. A few things that are very important. The first one is look at the previous and look at the forecast. It's exactly the same. So the market is not predicting cuts anywhere into the ECB at this moment. Okay. So when you stop and think for a sense, this is pretty simple, the reason. Okay. When we look to global sort of, let me just grab global inflation rates. Let me see if I have something similar. Countries, there, that's it. Cool. Okay, so we can see, of course, there's going to be many countries here, but we can see, let's say, United States. Okay, um, we have to look at for the last one because previous has been, previously. So, and that's all in percentage. So the euro area inflation is at 2% only. Okay, only losing to Indonesia, Italy, but Italy is on euro, so it's on euro area, so that accounts already for euro. What else? And that's it. And Switzerland, of course. So Switzerland, it's like 0.1%. USA 2.7, but we can clearly see that euro area is at 2%. Now, if we do a very simple Google search, what is the rate, the inflation rate for inflation rate target for ECB? And we can see that is at 2%. Okay, so 2% over the medium term. So anywhere between literally 2%, it's already very good. Okay, so the biggest point is that ECB has reached already the inflation target that they wanted. So there's no need for them to be looking to cut rates or looking to, hike the rates. As just leave as it is, and we'll do the job. Okay, so no really big stuff happening. Sorry, where it is, yeah. No big stuff's happening onto the interest rates decision. Most likely we're going to be maintaining the same at 2.15%. Maybe in the end of the year, we may get another 25 base points cut, and that's going to drive us to 1.95. And I think that's pretty low rates already. Okay, I would say it's one of the lowest rates around the world. Central bank rate around the world. Let's see over here, interest rates. Sorry, interest rates. So the highest one is Turkey, of course. The lowest one is Switzerland, and then Japan, and then Singapore, and then Euro. So as I say, it literally, like I think this is. We wouldn't be considering Japan, but Singapore definitely we can consider. But it's simple, like euro area. It's literally on the fifth, on the top five best countries in terms of rate around the world at the moment. Okay, like Brazil, we got 15%. Mexico, we got 8. South Africa 7. India 5. Australia 3.85, China 3, United States 4.5. So I guess there's no real rush for them. And euro area was one of the first ones to start to cut, and then we got the United Kingdom. And look at United Kingdom at 4.25%. But it's very simple to understand why they're keeping the rates high, because UK inflation target is at 2% as well. Okay, but when you look at BOE rate, sorry, it's here. BOE rate is at 4.25%. So what they want is they've lost the timing to cut that. And I think the one that did the best was Euro. Okay, because when we compare the inflation, so just put it here, Europe inflation rate, this one, and we grab that as well into Europe rate, interest rate, there we go. And we sort of just compare them for the last 3 years, and this one as well for the last 3 years. So this is the interest rates, and this is the inflation, okay? Look at the maximum that they've been was 2023 December, all the way from September to May 31st of 2024. So the maximum they have been with the interest rates, Europe was at 4.5%. On inflation, the maximum they've been, let me just put this into a line chart, like step lines. Yeah, that's better. The maximum they've been was above 10% in 2022. That's huge. Wow. Soon as the inflation started to decrease, 23, and then May 2023, June, July, August, September, October, November, December, January, February, March, April, May, I think was when they started to cut the interest rates, was in May 2024. Okay, so right here, May 2024, over there. Oops, sorry. March, April, May. May 2024, when the inflation came back to 2.6%. That's very recent. It's literally last year. There's like a year and a half, not even a year and a half, a year and a few months. So 2.6%, that's awesome. That's really, really great, okay? So clearly they've waited for the whole inflation to get back down. So because they were already increasing the interest rates previously, like from July 2022 all the way to September 2023, when the inflation was July 2022, May, June, July, when the inflation was getting the peak, and when inflation was even decreasing, they were still increasing the interest rates, okay? But they did a fantastic job. I really can tell you that they did a fantastic job, and they're the best ones positioned into the market at the moment. And it makes things much, much clearer for us that are looking to, to trade the Europe economy. So how can we trade that? How can that be in a sense, how can we, position ourselves into the ECB? Well, first thing is, with the market already expecting and pricing, let me just bring down the prime market terminal so we can have a look at some things. We're able to look into the interest rates probability over here. And we already have the European Central Bank, that's the ECB. The expectations are 59 point, well, let's say 60% that they're going to have no changes, okay? What is more interesting is by end of this year, okay, by end of this year, the market is sort of pricing another 25 basis points, okay? It's 1.80, let's call that 1.80. So it's actually 35 basis points, but I would call 25 basis point because it's very odd to a central bank to do like 12 basis points, 15 basis points. Nothing is stopping them to do that. They can definitely do that, but it's just very odd. I've never seen that happening, okay? But let's keep with 25, 50 increments of 25. So starting with 0 and then going to 25 and then 50, 75, and then go like that, okay? So most likely where we're going to get is at 1.8 by end of this year, It's very, very interesting. So there are another expected cut from the market, and most likely it's going to be into November or December. Okay, either those 2 months. My expectations are pretty clear with that. That being said, now what how can I trade that? That's exactly the question I did before. So with the first thing is that we're not going to be looking to trade the economic calendar because, as I say, 60% of the market is already expecting that. The only way that we could trade the economic calendar at 10:15 p.m. in Australia time, well, that's in Australia. It depends on your time zone, but for me, that's going to be at 10:15 p.m. So I'm going to be awake. Oh, sorry, I'm going to be awake and trying to do the best with my possible tools. But what I probably wouldn't do is if the market comes at 2.15%, trade that release. This probably no volatility. Okay. Yes, market will move a little bit up, a little bit down, and then sort of sideways for the next 30 minutes. But that's not what I want when I want to trade interest rate. Interest rate such a risk, like really, really risk data that I'm putting my capital at. So I want to have the best risk reward. And if the market comes as expected, as the forecast is indicating, so no changes into the rates, no big sense for me to trade that. Okay. Now, the only way that I would trade the ECB was if the market surprises. Sorry, if the ECB surprises the market. Okay. And what I mean by that is if we have the forecast, as we know, at 2.15%, and the ECB comes at around 2%, as I say, it's very odd for them to do 15 base points cut, but comes at 1.95, that is a 25 base points cut. Comes at 1.90, that's going to be really, really bearish for the euro. Okay. I'm not saying that the US dollar would gain strength, but I'm just saying that it's going to be bearish for the euro. Okay, maybe we could look to Euro Japanese yen shorts. We could look to Euro Aussie shorts, Euro against the Australian dollar shorts, Euro against the New Zealand dollar shorts, that type of currency. But I wouldn't be looking to short euro against the US dollar. US dollar is very weak, so I'm just not touching that into long positions at the moment. But coming back to reality, most likely no changes, and therefore no volatility. After 30 minutes, we're going to get the Euro ECB press conference, and that's where where I've mentioned that is the most important part of the whole release. The press conference. That's where the real data, the real signal will come from, and it will be really important that everyone listens to what Christine Lagarde, we have to say. One thing is, this is public. Okay, everyone can watch on YouTube. So if you go into YouTube, or even if you type on Google like ECB live stream rate decision, I'm gonna have to open YouTube for that. So if we go ECB interest rate decision, if you just type that on Google, or you can just put live now, and that will be a live video. Oh, there's actually here already, upcoming. Okay, ECB interest rate decision, Christine Lagarde new conference, upcoming. So if you click on that, live in 6 hours, I'm going to send the link for everyone on the chat, so you guys can sort of copy and paste this link somewhere on your computer, and you can just wait for that. Okay, but yeah, it's going to be live. and it's public, and that is one of the best things to do. I know it's very boring. Sometimes they talk about things that we don't even know what they're talking about, like some very hard word. But what is most important in that is what they're going to tell you about the forward guidance. What's the forward guidance? Well, what are they planning to do in the future? Are they planning to continue to hold? Are they planning to cut? What are they planning to do? That's the most important thing that we should be looking for. In another sense as well, important things is the growth of the economy. Are the labor market heating up, or the labor market cooling off? And that kind of topics are very, very precise when it comes to forward guidance, and that's the type of things you should be paying attention when it comes to for the press conference. Okay, cool. So that's pretty much it for the press conference. So really basic, but I guess it's going to work pretty well. So just expecting no cuts. So 2.15% as the previous. For the ECB press conference, most likely what we're going to get on a forward guidance is data dependent, and that they are, in a sense, they're ready to take they're ready to do anything if needed. Okay, that's pretty much what I think. So very data dependent in a sense. Now, how can we trade the euro dollar? Well, there's a few different possibilities. Okay, I would be looking to go long only on the euro against the US dollar. I don't think we would be. I don't think I would be looking to trade short. Besides, if there is a cut, then yes, I would be trade short. But working with the data that we have, that the majority of 60% of the market is pricing no cuts, then I have to work with that. Okay, so there's no sense for me to work with something that I don't have. So basically here you have two options. You can either, as we see, there's just a break of this stop, so it looks like it's forming some sort of uptrend, but in a very minor stage. I do believe that there is a potential for the market to come back to this area, solely because if we just zoom out a little bit, remember what I always say, the box, and there's literally a box right here, so the market can just come back and then push up. Okay, remember, it's the interest rates decision, so everything can happen, literally everything. Okay, so I'm very, very bullish into the euro, not only against the US dollar, but we could trade that against like the Canadian dollar. Okay, so for instance, like EURUCAD, and we can trade longs on EURUCAD as well. There are some nice places that you could place it. For instance, there you go. Like here we have a sort of a support resistance area, and we could trade above the highs of 1.61. Okay, so something around these. So my take profit would be, my entry would be right at the market. Stop losses would be below this little wick here, and my take profit would be at 161. Okay, just so I want to 2. So we're looking for 97 pips take profit, 48 pips is stop loss, and that's pretty damn good. Other currency that if there is a surprise and I would have to go trade short, I would trade short against the Japanese yen. So euro short against Japanese yen. That would be my favorite pair, let's say, to trade the short on the euro. Okay, and that would be just like for that moment. Okay, so just a momentum trade. If it breaks out below here, I trigger my order, and then maybe somewhere around here I'm off already, just like a literally sort of a scalping day trade. Nothing too big on those positions. But I still prefer euro dollar long, and that's my favorite trade for this week. Do you guys have any questions? Anyone have any questions that I could answer about euro dollar or about the ECB? I'm going to leave it a second for you guys to type your questions. No questions. Okay. One more thing I want to mention. There is a question. Check. So you are expecting to change. No rates. Yes, I'm expecting no changes on the rate. That's correct. I mean, no change. Yeah, that's it. Yeah, no change on the rate. Now, another thing is, a lot of people ask me, how can I grab the rate statement? Okay, because it's really important. Always we get the interest rate, we have the rate statement. Where do you think DXY going before value reversal? In what sense you mean about reversal on DXY? Sorry, didn't quite got that. Let me have a look. You mean like going up? DXY going up? I don't think it's going to go up. I think it's probably going continue to go down. Yeah, I think probably we'll continue to go lower and then break that bottom and just sort of continue to go lower, maybe to 96 next target. Now the ECB rate statement you can find onto statement. You can find into the ECB. I'm just logging. Not a problem. So that's from the 5 of June, so last month. The easiest way is just to type ECB. ECB. And then you click on that. Then you come to payments and financial stability. Monetary policy and markets. And then you come to monetary decisions, statements, and accounts. And then from there, you have monetary policy decisions. And then today, soon as that gets out, soon as the ECB gets the statement out, we will get the release of that. So it's going to be like 24th July 2025, and then you have monetary policy decision. And if you click on the monetary policy decision, then you're going to get that the report. There's a nice thing about ECB is that they have English and 23 plus languages. Okay. I don't know what language is this one. I don't know as well, but like you got Italian, you got Portuguese, you got Dutch, Spanish. You have plenty of languages. So if you don't feel comfortable in English, that's okay. If you don't trust much the Google translation that you can also do here, translate to English, that's fine. Most likely your language will be covered. Okay, cool. I guess that's it from me today. Does anyone have any questions that I could answer? No more questions. So basically, just a just a recap of the week. And we haven't had anything very crazy this week besides tonight ECB interest rates decision. And they are expected to maintain the same at 2.15%. And from there, will we get euro dollar bullish? Most likely, yes. Okay. Unless we have a surprise to the downside onto the ECB. Okay, unless we have a surprise to the downside to the interest rates decision, then we most likely will have a very bearish bearish euro. But for now, I'm still bullish on euro, still bearish on US dollar. So longing euro against the US dollar, longing euro against the Canadian dollar, the CHF, Swiss franc. It's always a good option to my on my opinion. How can we still trade US dollar, Japanese yen? Should I wait for price to break below 146 before shorting? It depends on your strategy, because the direction most likely is down. So it's going to depend on your strategy. If you trade pullbacks, then that's a moment of entry, because we have that pushback down and we're sort of having a pullback. If you trade continuation, then you need to wait for breaks. If you trade Fibonacci, then you have to put your Fibonacci and see where the levels are. So this depends on your strategy, to be honest. I believe that the market can go a little bit higher, and then I would be looking to short around 147, or even higher, 147, 148. Okay, cool. Thank you so much, everyone. Hopefully I've had a good time. Hopefully you guys have had a good time with me yesterday and today. I know that I was sick Tuesday, yeah, but it's completely fine because I'm back and it's all good. So hopefully to see everyone back on Tuesday next week. And if you have any questions, please bring the questions next week, and I will definitely be eager to answer them for you. Cool. Thank you so much, guys. Enjoy your weekend, and I'll chat to you tomorrow on the YouTube video. See you guys. Bye-bye.